Coming up in this show, I'm going to bring you my opening comments on the markets. Katie has trade planning with options, and she's going to show you how to bring together our charting with option strategies looking at Amazon. Arby has trade ideas. He'll be looking at copper and FCX with a bearish short-term trade idea in FCX. And don't miss our level 4 special, non-recurring membership. Yes, you can just pay once and get everything that's in levels 1, 2, 3, and 4. I'll bring you stock sectors. This is a no-miss segment for you to see. And I'm going to talk about a potential commodity surge ahead. A look at GSG, commodity ETF, and why inflation is probably not going away. And I'll take you through the analysis of the stock market, looking at multiple time frame analysis in SPY.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market started out the week quietly. Everyone was waiting for the big day on Wednesday when FOMC minutes came out, and then the bigger item, NVIDIA earnings. Indexes were sitting around the all-time highs when Fed minutes came out on Wednesday, and they said they were worried about inflation and they see a longer path to rate cuts, and even some indication they could hike if needed. Though in the last meeting, Powell took hikes off the table. The stock market moved to the downside on the news, but then rallied into the close anticipating NVIDIA's earnings. NVIDIA certainly did not disappoint. Earnings beat significantly, guidance was very strong, they called a 10-for-1 stock split, and raised their dividend. The stock soared on Thursday. That was over $1,000, got up to $10.63, a high for the day. Pulled back to about $10.38, but still up about 90 points on the day. Just absolutely huge day. But traders and investors, they got caught leaning. There was that higher opening based on the NVIDIA earnings, but then there was a big downside reversal, and the S&P 500 moved down 85 points from its high. As sellers, they were around all day despite NVIDIA being super strong. Before the market opened, if you would have guessed that NVIDIA could be up almost 100 points and the market be down significantly, most people would say, not a chance. S&P 500 ended down 50 on the day, and the Dow down over 600. And that correction was certainly due. And I'll show you that coming up in the charts. And maybe it's healthy versus any real damage being done. Friday, the market's trying to rebound here as we do this show late morning. Pre-holiday Friday here normally is a slow Friday, so we might just find ourselves in a narrow range as the market is trying to bounce. For the stock market, everything we look at, cycle patterns, indicators, they're all positive. So as long as these conditions exist, we have to look for a higher stock market. That doesn't mean I'm disregarding potential trouble ahead, or at least greater volatility. I'll call this market bubblicious, rising on the lag effect of Fed's years, decades of zero interest rate policy and government wild spending, pouring money into the economy. And of course, we have to look at AI, which those stocks that are heavy in the indexes, the mega caps, have done super well and moved the market up to near historic valuations. And coming up, I'll show you why commodity prices are likely to keep the Fed from cutting. I warned about this many months ago, talking about the fact that first indication that there was going to be some rate cuts near, then commodity prices were likely to rise. And with stocks at all-time high and inflation still strong, tight labor markets, there's no way that rate cuts are coming soon. I talked about that it would be very hard to get many rate cuts this year, and maybe only getting a couple if we did, and that would only come if the stock market was moving down sharply. But all those high prices that we just talked about and the effects of the bubble that has been created here, in my opinion, that hasn't stopped investors so far. So higher prices are still likely for the indexes, but we're going to start to say the upside is limited. For the week, it was mixed. The NASDAQ up small, other indexes down 1 to 2%. Bond market, it loses about 3/4 of a point on the 30s. 10-year yields up 7 basis points. Gold had a big correction after getting up to $24.54. It's down about $80 on the week, and silver's had a pretty good pullback also. Dollar, small gain in here, and oil loses $2. We've talked about trouble in there, and we think that the oil market has significant downside risk coming up. If you're new to askSlim, get acquainted. Sign up for our free snapshot. All you have to do is go to our website, as you can see right here, and see Get Free Daily S&P Analysis. Put your name and email address in that, and no charge at all, no credit card, and you'll be getting information from us every single day. On YouTube, subscribe to the channel, click the notification bell, and do like this video. Give it a thumbs up. And on X, follow me at askSlim. Questions that you may have, write to Matt at askSlim.com. Here comes Arvi. Great analysis.
This is an askSlim trade idea video walkthrough for a short-term short in FCX. Prior to looking at FCX, what I want to highlight is what's going on in copper, because I think it is really very notable this week. Let's go ahead and pull up copper. Please note that we do cover copper along with 26 other futures and forex contracts in FutureSpeak on Wednesday. FutureSpeak is available for level 2 members and up at askSlim.com. Right now, we have seen an obvious, really strong bullish rising phase. This has really played out very well as per our overall cycle analysis as we just blasted off of that trough, and you can see that really strong rally. Now we have seen a sign of failure here, and we are raising the odds that we are in the peaking phase of that dominant cycle and getting ready to have a pullback. Important to emphasize the overall cycle structure. This is a positive cycle structure with a very likely much higher cycle low that would form versus this old low right there. That says good odds that we see new swing highs in the next rising phase, which goes out into the late summer, into the fall. So still overall bullish on copper, but watching for a flag to form. On the daily chart, you will see that there was a low that formed right there. Then we got into the rising phase. We have since seen a failure versus right on the 505 to 519 area. And we'll be watching for a move into this next low, which is due right around the middle part of June, below that 78.6 fib at 462. A daily close below that level would raise the odds that you've seen a peak form here in HG. And if we get through this low at 446.60, that would confirm that the intermediate term cycle high is in place. So with that as the overall context, let's go ahead and jump over to FCX. So this is our both weekly and daily cycle analysis now for FCX. And what we see on the weekly is just like copper, a strong rising phase, and now likely a peaking phase that is just getting underway. Overall, cycle structures are quite positive. We have a low that is due 617 to right around 85. We are watching for a dip into this zone, 48 to right around 45.70, after which we would look for a move back to new highs, which goes out into the late summer, early part of fall time period. If we jump over to the daily chart, this is where our short side idea is really in play here, is we are seeing a peak right there. We are watching for just a modest little uptick. It's really important for this to be a mild rally, and we would look for that to be a bear flag, then to curl back down again one more time. On the upside, we have a zone from 52.37 to 53.46. We are watching for a failure versus that. If it moves through the minor 78.6 at 54.24, this trade idea will be marked a loser, and we are targeting a move down through the 61.8 at right around 50.12, 78.6 at 48.73, and then this old low at 47.10. So those are our levels on the downside. We have the COPX, which is the copper miners ETF in purple, and we have FCX in black. Both have lows that are due right around the same time period, right around the middle part of June. And that next trough out here in FCX is due right around 720, perfectly in line with copper. So that says very good odds that the middle to end of July time period would carry the key trough in both copper as well as FCX. Okay, so this is our short-term short side idea in FCX, a decent setup and one I wanted to share with you all here. If you have any questions, feel free to reach out. Thanks again and have a great day.
Okay, Katie, she's going to show you this bullish trade idea in Amazon. She combines cycle analysis with option strategies. It's just amazing work. Now, don't forget, she's going to show you how to open up a Tasty Trade account. Right through our website, we get credit for that. You open up a Tasty Trade account, you're going to get a great special bonus from them. So please do take a look at that. Open an option account there, right through our website.
Hi, this is Katie with askSlim. This is Trade Planning with Options on May 22nd, 2024. Today I'm going to show an options trade idea in Amazon. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askSlim.com. This trade idea was sparked by a question that was asked by a member on Discord in our Cycle Low Timing Tracker channel. So to begin, we're going to look at today's Cycle Low Timing Tracker. The question was focused around Amazon and how to interpret that Amazon is found in several different places on the tracker. When I'm focusing on a specific symbol with this tool, I like to first locate all the places where that symbol is found on here. So I can just hit Control F and type in Amazon. So this shows me that there are 4 occurrences and it highlights them for us in the tracker. So now starting over here on the left, we can see that Amazon is in the cycle timing period of risk box for this weekly time frame. That's this leftmost column in each of these categories. So that's right here. And then in terms of the weekly time frame, it is also over here in the bottom confirmed box. Let's quickly switch over to the weekly chart and see what this looks like. This is the weekly chart of Amazon. These blue vertical dashed lines represent the weekly cycle timing window, which is the period of risk. Now, since we are still within that time period, then Amazon is going to be found in the cycle timing period of risk box for the weekly time frame. Now, it has also exhibited enough positive price action off what we believe here to be the intermediate cycle low to trigger the bottom confirmed algorithm for the weekly time frame, and that is why it is also found over here on the cycle low timing tracker. So sometimes at the end of a cycle, we get a false rally that triggers the algorithm, and then another downside move that takes out what was the perceived cycle low. You can see some examples of that right here. We got a small rally and then another downside move. Back over here, a good rally and then another downside move. So leaving the symbol in the period of risk box is meant to alert you to this possibility so that you can use caution if you do place a bullish trade. Going back over to the cycle low timing tracker, we have also got Amazon in the cycle low timing period of risk box for the daily time frame. So symbols that are in both weekly and daily cycle timing are in bold font because coming out of both weekly and daily cycle troughs can often provide lucrative opportunities. The bold font helps you identify those potential opportunities. So we are in daily cycle timing, but notice that Amazon is not in the bottom pending or bottom confirmed categories for the daily time frame. Let's see what that looks like on the chart. This is the daily chart of Amazon. Again, these blue vertical dashed lines represent the cycle timing window. So since we are within that time period, that is why Amazon is found in the cycle timing period of risk box for the daily time frame. We are getting a little bit of an up move today. So this yesterday's candle could have been the cycle low, but we haven't had enough positive price action yet to trigger either the bottom pending or bottom confirmed algorithms for this time frame. And there is still plenty of time here for another downside move to retest that recent low or move down even further into the support zone. Now, this current cycle is due to trough between May 21st and May 31st. That time period fits within the weekly cycle timing window, which ends June 7th. Because the end of the daily cycle corresponds to this weekly cycle timing window, Amazon is also found in the in sync box. That's way down here on the bottom right. That's the in sync box. In general, symbols located in this box are expected to exhibit weakness and maybe even breakdowns in their current daily cycles. However, since Amazon has triggered the weekly bottom confirmed algorithm, we have put a note in here which you can read by hovering over this symbol. It states that although the daily cycle is in sync with the weekly cycle timing window, the cycle may show strength instead of weakness owing to the fact that Amazon has triggered that weekly bottom confirmed algorithm. The last thing to note here is the two small colored boxes next to Amazon. The first box shows general conditions for the intermediate time frame that are based on a combination of momentum and cycle phasing. The second shows the same thing for the short-term time frame. So the green makes sense for the intermediate based on being early in a rising phase on the weekly chart with positive momentum conditions. The yellow makes sense for the short term since we're in the bottoming phase on the daily cycle with mixed momentum conditions, negative reversal scout and slim ribbon still positive. So the sum of the evidence then suggests a generally bullish bias in Amazon. However, we do want to wait to see how that daily cycle timing window shapes up and wait for an entry signal. Now we're getting a momentum continuation to the upside signal on the slim ribbon PO. Let me show you that. Here's what that looks like. This is the slim ribbon PO down here. Here was that signal, but notice that just as we're recording this video, the momentum has turned neutral and is turning down slightly. So a signal would be a momentum continuation signal on the slim ribbon PO, but we would need it to be under positive momentum conditions. And I also like to use a return to positive momentum on the 2-hour chart. Both the slim ribbon and the reversal scout on the 2-hour chart are negative. Now let's switch over to the Tasty Trade platform. First, please go to the askSlim homepage, hover over the Marketing Partners tab, and click on Tasty Trade. They are our preferred options trading platform, and if you open an account with them through our link here, that helps you with a special bonus, and it also helps us. Here is Amazon over on Tasty Trade. Notice the low IV rank, 1.3. This suggests a long premium strategy that will benefit if we get a pop in implied volatility. Let's use the June 21st monthly expiration cycle with 30 days to go. With a bullish hypothesis in a relatively expensive underlying with low implied volatility, we can do something like a call debit spread. To set that up, we buy an in-the-money call. Let's go right at the money and buy the 182.5 call. Then we're going to sell an out-of-the-money call to reduce our cost basis. Let's sell that 187.5 call. So this is a $5 wide call debit spread. Of course, you can make your spread wider if you like. If you look over here, we have the profit and the loss. We're trying to get that ratio as close to 50-50 as possible. So if you went $10 wide, then you would probably want to use the 180, 190 strikes. I'm going to be doing a $5 wide. 182.5, 187.5 gives us a ratio that is close to 50-50 here. Now remember that if we're waiting for an entry signal, the strikes might be different at the time that we activate the trade. So keep an eye on the chart and on the Discord channel and the options trade idea tracker. We will follow up on this trade idea next week. As always, feel free to reach out on Discord or via email to katie@askSlim.com if you have questions.
This is something you really need to watch. We're going to take a look at the prospects for inflation. This is stock sectors, and we're going to look at GSG Commodity Index, intermediate and longer term analysis. And I say, inflation is not going away. And in the past, you've heard me refer to a doom loop. And what I said was that the way that the Fed is creating money, the government is borrowing money, all of that was going to get commodities moving on the upside once there was a pretty good indication that there was going to be an easing condition by the Fed. And we have seen recently commodities take off to the upside. The metals are absolutely exploding. We're seeing the grain starting to move up. Also, the only really laggard that I see in the commodity area is the energy sector, which I don't think is going to go up very strongly. In fact, may actually be going down. But the rest of the commodities really look like they are very strong. We're going to take a look at this as we switch over to look at the monthly chart on GSG. This is the GSCI Commodity Trust. It's the ETF, symbol GSG. And this is a real good look at a basket of 24 commodities. And this is the monthly analysis. Again, always we look at the cycle rhythms in the market, the energies as money comes in and money comes out, or in this case, as the demand for commodities are strong, or the demand for commodities or a corrective process goes on. You can see here. And of course, the weakest areas are where there's a liquidation near the end of each of these cycles right in here. This was quite a negative occurrence when it breaks that cycle low, and then you can see it finishes very weak. In this case, where momentum is strong, and this is the reversal scout on the monthly pattern, it didn't even have any time to correct in here, just 1 month down and then up again. We have a very interesting thing going on right now. This is actually called a base, where it's been coming down and then the low is higher than the previous low. That sets up a strong upside move after that, as you saw right over here. Let's take a closer look at what's going on right in here as I grab this right like this. So here's where we are right now. This is that same basing look, as this cycle here was actually a positive, and this is kind of an inside cycle. It's inside this high and this low range. And in here we have a upward condition going on in momentum with only a little time to decline, as you see right over here. This actually may mean that there was only maybe a matter of a few weeks in here for a little bit of a drop, and then you can see that commodity prices are very likely to rise here into 2025. That shows you that the inflation problem is probably going to get worse, not better, because commodity prices are very likely to be in strong demand for very much maybe the next year. Looking at this. So maybe there's a little bit of a downside right in here, but that really says to me a minor correction, maybe that's due in the metals. And then the upside is very apparent for quite a number of months going forward. That is good reason to believe that the inflation problem is not going away. As I said, let's switch over to the weekly analysis. Let's keep in mind that this is a very positive structure that we see in here, as there's only a little bit of time for it to come down and very likely to move up very sharply. Now, one more thing to look at. You see the measured move right up over there? So there's an inverted head and shoulders right here, left shoulder, head, right shoulder. You can see it got stuck at the neckline here. This is very likely to set up a pretty good upside move based on that, and that measured move up there at 27.32. That would be a good 25% jump or so in the GSG. That's a lot of an upside move. Let's take a look here at the weekly. And the weekly chart right over here, well, you can see there's some similarity in the weekly chart. You had this base form, and now you're in a very bullishly configured cycle. So in other words, this is very strong, moving up here, momentum turned down as you expect in a corrective process, and now just a matter of a few weeks where it may pull back. There's a possibility that's the low, and getting ready to move to the upside. So we'll just look for maybe some kind of a little pullback in here, but then you see this rising phase in the cycle right here. That's a period of strength in the July through September period. So, that's when we're looking for the Fed to actually start to ease up, or at least the market is, and maybe get some rate cuts. But, with inflation to me looking like it's about to pick back up to the upside based on commodity input costs, there is a lag effect in that, but we have been seeing stronger commodity prices overall for some number of weeks in here. And that lag effect kind of takes a while to get into the headline numbers, but this really looks to me like the Fed will be paying attention to that. And there's a possibility there will be no rate cuts this year based on what we see right in here, because the Fed will see that certain conditions are existing where inflation is stubborn, commodity prices are going up, employment numbers are very strong, the economy is still growing, and stock market at all-time highs. It's a pretty hard way to look for rate cuts when you have that, all of those variables in line right there. I think it's pretty tough to get rate cuts at all based on that. So if they did it, it might be just symbolic, just like the cutting of the way the balance sheet is rolling off. That is just a symbolic move, doesn't mean a lot, but this is very strong. If you look, we'll just look back a little bit further, and you see this shape of this, which is very positive in that cycle, and you can see the same thing occurred here and here and here. Those are all very strongly configured cycle patterns and strongly suggest that what we're seeing right over here is going to be a sizable upside move in the commodity index, this GSG. Really, I have to say, looking at this, this is that doom loop where inflation is just going to keep coming back. And this, I think, is important analysis for you to consider when you are looking for rate cuts and think that will come and support the stock market. I don't really think so. And really, the only way we're going to see any real rate cut scenario is that the stock market goes into a large decline, that being because there's some anticipation of a sharp slowdown in the economy. And then you'll see commodity prices, they won't go up under those scenarios because there'll be liquidations going on. And that would set up rate cuts. And that's really what it would take, would be a sharp drop in the stock market, which we don't really see right now. So the prospects for lower interest rates are pretty dim based on you look at this, and the prospects for higher inflation, well, it looks like a pretty good scenario for that. So that's it. Stock sectors, GSG, the GSC Commodity Index. I think it's important to look at that, and I hope you enjoyed it. All right, this is our special that we're running these last few weeks, and we'll be running it just another couple of weeks. This is our top tier, level 4. This is for first-time subscribers and for our members that want to upgrade. This is a 1-month trial, non-recurring. We almost never do this. You can sign up for 1 month and you will not be auto-renewed. You'll have to make a decision whether you want to come on board, and we'll send you a special for that also. So it's a levels 4 special right now, 37% off, only $99 for that first month, again, non-recurring, versus $159. And you're going to get our market condition monitor, the MCM. This is just fantastic. It's got all of our algorithms built into it. This is what it looks like right here. You can see you can toggle to your own trading style, over 115 of the best symbols that are in there, stocks and ETFs, and you get real-time notifications. And we're just upgrading this to our Pro version. You're going to get an announcement on that, and it's amazing the kind of notifications that you're going to get based on just clicking a button, essentially, and you're going to be able to see when our proprietary indicators flash certain things, and it's just fantastic. And then there's a change log in here. You can see where everything's changing. Just toggle into your own trading style, as you see here. It's amazing. The MCM is fantastic and included in level 4. Here's all of the things you get in level 4. You get our multiple time frame charts on the 84 best traded symbols. You can import them and save there on the Thinkorswim platform. The proprietary studies with our Slim Ribbon, Slib Ribbon PO, Reversal Scout, MCI, OBI, and more. I'll show you all of those coming up later in the show. And you'll get our grid archive with all of our custom charts and best indicators. Tons of support resources, as you see right here, and a full membership access gives you that market condition monitor and everything that's in level 3, 2, and 1, including a video library with, I don't know, must be over 1,000 videos in there right now, and about 250 that are evergreen, and you can go in there and learn from all of my teachings. $99 for the first month, and non-recurring. You will not be billed again unless you want to join. Click the Learn More button at the top of askSlim.com. You have questions, write to Matt at askSlim.com. All right, analysis on the stock market. Projections on the S&P 500, some important information. This is a slide that's really important for you to read. It talks about our approach to analysis of the markets and how you can best use that. Stock market, S&P 500, SPY, cycle analysis and projections, and I'm going to use my proprietary level 4 studies. That's what's included in this special that we're offering right now for just $99, non-recurring. So I'm going to show you our charts. I'm going to switch over to the charts of the SPY. That's the ETF for the S&P 500. So this is our cycle analysis chart. And what this shows you is how we do our analysis, starting with just a blank screen, essentially, just a chart. This is a weekly chart. And then putting in all of this artistic work that you see that really gives us a great sense for the money flows in the market, the conditions in the market. And I think that you will find this to be the best way to really understand markets of any way. On the bottom here, cycle brackets. And what those show you are the rhythms in the market, or the heartbeat of the market. And you can see there is a rhythm in the market and how the chart actually follows that movement in here. We were looking for a 5.3 to 8% correction in here. It was 5.9% on the downside. And this is our Reversal Scout. This is one of those level 4 proprietary indicators that you can get if you're a level 4 member. And I'm just going to zoom in a little bit right here so you can see what we're looking at now. This is that next rising phase. Our indicator here has turned up, telling us that momentum is moving to the upside and other flows of money are coming in to the upside. And these are our upside projections in here. And we've been talking about 540, something like 5,400 on the S&P 500, or 550 right there. It's 554, so that would be 55,400 on the S&P 500. That's the upside projections that we have in here. And early in the show, I talked about the limitation to the upside for a lot of reasons. These are the monthly extensions, and those create resistance. and the upside valuations that are now approaching 190% of GDP. That's after we've had economic growth. The high of the valuations was 199% of GDP historically. That came at the peak of the last bull market. I'm just going to go back and show you where that peak was, way out over here, and that was the point where we had, of course, a big stock market move to the downside. So where we are right now is clearly in a bull market, moving to the upside, momentum strong. This is the 34-week moving average, which is our really dominant moving average that we look at. And often there's a test of that or the 13-week moving average, which is right here. In very bullish occurrences, it only gets below the 13 and not to the 34, and that's what happened now. And this is that key cycle low right over there. So without a break of that level, which is pretty far away, we consider the market to still be in a bullish condition. So everything on here on the weekly chart does look positive. Now, I want you to see out here. See this note here, potential large drop in Q4 of 24. Here's election day right there, November 5th of 2024. I don't know if these are related, but it is possible that they are. Additionally, if there was a pullback in here, here's your minor support. So that's how we have this all labeled in here. And what we see is that these periods of risk, which are when both of these cycles are moving to the downside together, we call that the nesting period right there. And if I just go back on this chart, you can see each of those nesting periods brought sharp declines in the market. 10 to 20 something percent. That's where you get the big drops. And that comes out in the Q4 period here that we're looking at. So for now, we're only in May, we're looking for potential, pullback or modest pullback over here, as you see right there, that takes you out into the summer. And then probably another rally that gives you a peak out here in late summer, early fall, and then into that risky period. So that's kind of a longer term look at the S&P 500. Remember, if you want to learn our cycle analysis, go to our workshop tab, and you'll be able to see a free video on that, on some basics about cycle analysis, and it's really worth taking a look at. So that is the weekly analysis. It's strong. It's this that has dominance over the daily analysis I'm going to show you. So you get messages back and forth between the weekly and the daily. And in this case, this is strong, and you're going to see that the daily analysis right here is also strong. So what we do is we look at the cycle rhythms, the energies in the market. And we have a very clear 24, 25-day cycle that you see here. That's the black cycle bracket on the bottom, and it helps us see that movement in there. There is another out of phase one that looks like it lines up and creates some similar energies. And normally a bigger cycle like that would be dominant. Now, I don't see a lot of dominance in here except when they came down together right over here and came down together right over here. So we're watching this one to see if it has an effect on it. And let's just look over here. And what we do is we build these projected clouds. In other words, when it's pretty strong, it'll move up into the upper cloud over here and then move up into the projection. So this is at 540. This is the lower monthly extension, about 543. And that's why the upper side here is projected in there. So in other words, you could see the shape in here, super bullish. Now this is the slim ribbon right over here. And the slim ribbon is giving you a positive indication. Now if you look at when the slim ribbon is positive, and I'm going to look back over here, here's your positive ribbon, all of those, and the slim ribbon giving you the support, which it often does. And when you get these modest corrections in these very bullish cycles, you get into the slim ribbon and then begin to move up again. We actually have that exact occurrence right now, where we have the positive slim ribbon that returned over here, and then this swamping condition where the weekly pressures are so strong, it keeps this from actually correcting. And you can see we had one big sharp down day here, and potentially to come down and test those lows, get into the slim ribbon, maybe this 23% correction right over there. But if they get one or two more down days in here into early next week, that's really the worst of it that we see, and then we see it moving up. Once that's established, we'll have an anchor point. And then we'll be able to put in a more precise cloud in here. But this is pretty close to what I see moving forward. So again, we'll be looking for the upside. But once this low is established, that's going to be an important level. And if it's established and then moves up as we expect, and then comes down and takes out that low, it would be a really negative occurrence. So right now, there's no reason for us to expect that. The only question we have is, will this come down and test this low over the next couple days, and then give you that anchor point set, and then begin moving to the upside again. So you could see that what we have in here is a positive slim ribbon, which gives you that look at the upside momentum that aligns with what we showed here on the weekly chart with that upside momentum. And all of this is positive, and there's no reason to look at anything but positive occurrences based on this, because that is the highest probability, and our analysis is probabilistic. So that's what we see in here, looking at the SPY, the S&P 500, on the weekly and on the daily. Now let's look at the daily in a little different way. This is the option bias study, and this is a very unusual study. This is a level 4 study for our members. And this is built in a way that it is built on multiple time frame momentum conditions. And what it tells you also, based on a volatility variable that goes in there, is when the market is in really good shape, when it's slightly overbought, when it's very overbought, or the opposite on the downside. So here you could see through this whole period, December, January, February, March, all of those was giving you conditions that your options should be biased to the long side. That's what that means. That is a P3 reading, as you see that right over there. And I get the P3 showing here. There it is. See that 3? That's a positive 3 reading there. Here you have yellow where it went neutral. It went negative for a little while during these periods, in line with what was happening with the negative slim ribbon. And then it turned positive, and here you could see again telling you to bias your option positions to the long side. So this is a bullish condition that exists right now. Now we're going to look at the slim ribbon right over here and the slim ribbon PO. Slim ribbon PO is a fantastic indicator because it tells you not only when the slim ribbon is positively configured, and that's when it's green over here, and you could see the slim ribbon built into that, but also when it's likely that momentum will resume on the upside after some modest correction. And you can see that happened in each of these little dips in here. The slim ribbon gave you a signal it was going to resume to the upside. Here is where it turned red in here, and it gave you a downside signal right there that was quickly negated to neutral. As you see, this turned blue right there, and then it turned green again. And you can see what we're getting here, the upside arrow, which tells you that the market is likely to be resuming to the upside. Now, of course, that doesn't mean there won't be wiggles and little pullbacks, but at the same time, it does give you a great indication when you look at the option bias indicator, you look at the slim ribbon PO, again, all level 4 indicators, that the market is certainly in good condition, and the highest probability is that it will have an upside bias as we're looking in the market. So no matter what you hear me say about valuations or limited upside or any of that, all of these indicators are saying for traders, people that are engaged in the market in a relatively short-term basis, let's say over days or weeks, that the indicators are saying the market is in positive shape, pretty clear. This is a very unusual chart. In fact, on the bottom here, we have our market condition indicator. And when it's up in the 90s or near 100, the market's in fantastic shape. When it comes down here and gets into the positive 25, between that and negative 25, it's testing the market. This is built on multiple time frames, also with a heavier weighting to the longer time frames. So if the market is in good condition and it corrects and tests the zone and then moves up on the upside again, it gives you a positive reading. So this is another level 4 indicator, and it then gives you this great reading that says the market is positive. And that reading came over here, and that was right here. This is a 2-hour chart. And what's unusual about it, and we teach how to create these cycle patterns, this has the daily cycles built on a 2-hour chart. And I've enveloped it to show you these daily cycles in here. And this comes right out of the cycle analysis primer, which is Profit Magic of Stock Transaction Timing by J.M. Hurst, which is what I read 49 years ago, actually. And that really started me off on this style of analysis. So he envelopes everything. We just put in the top cycle line in all of our charts. And you can see in here where we are is that this cycle over here, as we showed on the daily, is coming down near its end right over here and likely to turn up again. So you see he had the big downside move over 3 bars or 6-hour time period. You're getting this little rebound on Thursday. We don't know whether that's going to hold. We had the bullish slim ribbon PO turn neutral in here. So it might mean that you get a little more corrective period over here over the next, day or two, and then likely to be in this rising phase over here, just as we showed on the daily chart. So there's your daily chart with that cloud showing us the next move is likely to the upside. And here it is overlaid on a 2-hour chart right there so that you can understand it along with the market condition indicator, the MCI as we call it, turning positive. And this may be a little more correction, but then probably moving to the upside again, with the indicators all showing positive as we look at that. So I'm just going to show you what this looks like if I was looking at all 4 of them right there. That's everything I just showed you. I'm just going to blow them up, and this is how we look at it right over here as I just click an arrow, and it takes me through all of that. So that's the look at the SPY, and basically what we're talking about are bullish conditions still existing in the market. SPY cycle analysis, multiple time frame analysis with our proprietary level 4 studies. I hope you found that very interesting. And of course, we monitor this every single day. And when things need to be changed, we change them for our members, and they see updates on these regularly. So that's what I had to share with you on the stock market today. Remember, our level 4 top tier special trial is going on right now. It's only $99 non-recurring. You get everything in here, including our market condition indicator that has all of those, a market condition monitor, which has all of those indicators built into it. And you will be able to see market conditions and get notifications. So it's fantastic. $99 for level 4. And don't miss this one-time use opportunity. And again, it's not recurring, so you don't have to worry about it being renewed on you. We'll be sending you a special. You'll be able to stick with us if that's what you want to do. So really worth taking a look at with this special for level 4. Make sure that you go to askSlim.com, get acquainted, sign up for the snapshot free. That's this website right here, askSlim.com. Put in your name and email address, and you'll be getting our information on the stock market every single day. Subscribe to our YouTube channel. Give us a thumbs up. Like this video and watch our member videos in the playlists. Follow me at askSlim on X, and any questions you have, write to Matt at askSlim.com. That's it. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been